I entered a long trade right at the top of this chart. Price then went downwards, but I managed to exit with a $1,000 profit while risking $1,000. What? That doesn't make any sense at all. Today I'll be walking through the technique I've been using for the past 3 years that I don't really talk about much on my channel. Hi traders, if we haven't met, I'm Lisa, a data scientist turned algorithmic trader. Emphasis on the algorithmic trader because I'm not a discretionary trader, because I'm a terrible discretionary trader. I almost always get the direction wrong. Like you can see on this chart, I wanted price to go up, but it went down, but I still made my 1 hour trade profit. My secret to making profits, even when I'm wrong, is grid trading. And since everyone has a different definition of grid trading, I'll show you my technique. Here I've got on my screen a whole bunch of horizontal lines, and this is what you call a grid. So these lines are spaced out evenly between them. Let's draw some price action on here. So let's say the price went up, went down, went up, and went down again. I'm going to show you the buy side only, but the sell logic is exactly the same. So let's start off here. The price is going up. Let's place a buy trade and entering here, and the price goes up. So we take profit at this point right here. It is our very first buy trade. And now because we are at the next grid, we enter another buy trade, and now the price continues to go up. So again, we take profit. And at the very top, we are hitting a next grid level. So we take another buy trade. However, now price is going down. So as the price going down, so for every single grid level, we are opening another buy trade if one doesn't already exist. So we open a few more buy trades. So now we've got 1, 2, 3, 4, 5 buy trades open, all holding unrealized losses. And as soon as price goes back up, now we can close off this trade. And because there's already an open trade here, we are not going to open a brand new trade. Price goes up again. So now we close this trade, and as price continues to go up, we continue to close off these trades. And when price starts going back down again, when there are no open trades on this particular level, it will open a brand new trade. So the rules for my grid trading is fairly straightforward. Number 1, the grids are evenly spaced apart. Number 2, if there is no open trade on that particular level, then we open a brand new trade. Number 3, each trade is the same size. I'm not using a martingale in this approach. And number 4, I take profit at the next grid level. Here is one of my recent trades, the one you've seen earlier. So this one is on the ASX 200, and this group of trades here that I'm circling, that is one trade. I am risking $1,000 to make $1,000. And I started off trading right up the top here. And my intention was to set it to a buy trade only, but you can see there are a few sell trades in here because I made a mistake and I forgot to disable the sell sides. So yes, there are a handful of sell trades, but the rest are buy trades. You can see the grid lines, 1, 2, 3, you can see each level, there's a whole bunch of buys and sells. The grids are quite distinct. So every time price moves up and down, you can see a brand new buy trade being entered. Let me zoom in so we can take a bit of a closer look. Right here, you can see buy trade, price went up, so we're closing the buy trade. Price went down again, we're placing another buy trade. Every time price goes up and down, we're taking small profits. 1, 2, 3, 4, 5, 6 buy trades here, just in this small group of price movement where price goes up and down. And the reason all these trades close off in profits at the end here, because it hit my take profit mark. So I risked $1,000 to make $1,000, and this entire trade group made $1,000. And right now I am in a brand new trade. I'm using the exact same grid size, the exact same lot size, and currently I'm up about $200 of my $1,000 target. Let's switch to another chart. This is the Aussie New Zealand, which is well known for going sideways, up and down, and grid strategies work really well on this particular currency pair. Again, you can see the first trade that I did, this first group of trades, I risked $1,000 to make $1,000, and here I made $1,000. And the reason that this group of trades is so small is because I'm utilizing both the buy and sell trades at the same time. You can see the lines I've got currently open. So each grid here in this particular scenario is 10 pips. And I'm trading at 0.7 lots. Right now, price is about in the middle section. I've got 3 open buy trades up the top and 3 open sell trades at the bottom. And every single one of these lines you see on the chart is a small take profit. Let's go to one more chart, and now I've got gold open. And you can see, again, this one, I've set it up to risk $1,000 to make $1,000. And according to the little info box I've got here, currently I'm up $260 out of my $1,000. And this trade has not closed yet. Not everything goes to plan all the time. So here in this chart, I am trading crude oil, and I wanted to go shorts only. So you see here, only short trades. And I entered right here, right at the top. As always pick the wrong direction. And then price started to go up. And then the US went and decided to bomb Iran. There were rumors that the price of oil would go up. So I manually went and closed all these trades. I lost about $180 in this particular trade out of the 1,000 that I had originally planned. And of course, afterwards, price went down. If I had just stayed in this trade, we would probably have been in profit about maybe $600 to $700. Even though I did close all these trades pretty high up the top, you can see there were still instances down here where I did come out in profits. We're making small profits all the way for every single one of these down lines, and then these 3 up lines were in a loss. Looking at my open trades, you can see I've got 3 groups of open trades. I've got the Aussie New Zealand, a US 200, and gold, all risking 1% or $1,000 on this 100K account. Now with grid trading, you always have some pretty big drawdowns. So currently I've got a 2% drawdown, which is mostly consisting of Aussie New Zealand and gold at the moment. But the way I've got it set up is that the Aussie New Zealand worst case scenario, I will lose $1,000 or 1%. Same with the gold, same with the AUS 200. So my account is not going to blow up. It will at most make a 3% loss on my current open trades. In terms of equity, currently I'm up almost 3% on this account for about 2 weeks of trading. So let's take a look at my history. And you can see all up, I've made about $5,600 in closed profits. I'll just scroll up so you can see all the trades. Most of them are profitable. They only get into the negative when the take profit of $1,000 has been hit. So they close any open trades, ensuring the equity is up at 1%. There are 2 common misconceptions when it comes to grid trading. The first one is that you need a lot of money. The account I showed you earlier, this one is a 100K account, and I am risking 1% per trade, but this is a low leverage account. Here is another live account. This one is with Black Bull Markets, and this account started off $1,000 a few weeks ago and is currently up $96 in equity, or just under 10%. This is a rather small account, but the reason I can trade grid on this account is because Black Bull offers 500 to 1 leverage. And here you can see the first group of trades has closed. I'm risking $100 to make $100, and the first take profit was reached right at this point here, making $100. So now I've entered a second group of trades. I'm trading the Aussie New Zealand, again with a grid of 10 and a lot size of 0.07. I do have the account linked to FX Blue, so you can see it started off at $1,000, and most of the time it goes up. This downwards movement is where it closed all open trades because it hit the $100 profit target, and now we're up into a second trade. and I'm only trading the Aussie New Zealand on this account so far. If you're looking for a solid broker, Black Bull is definitely worth a look. They're a New Zealand FMA regulated broker in operation for more than 10 years, and your funds are held in segregated bank accounts than the company funds. What I personally like is that they're designed for people who want to actively trade, and they offer an amazing 500-to-1 leverage. You can get really tight raw spreads, super fast execution, and they've got MetaTrader 4, MetaTrader 5, TradingView, and CTrader to choose from. So you can trade manually or use robots to do the heavy work for you. They've also got different account types depending on where you're at in your trading journey. You can open a demo account if you just want to test things out, or choose from 3 ECM account types, including commission-free options and spreads from 0.0 pips. You can get access to Forex, commodities, equities, indices, metals, and a lot of different assets in one platform. And the great thing is that they offer free TradingView plans and a VPS for active traders. I've dropped a link in the description if you want to check them out or try a demo. So I use Black Bull because they give me 500-to-1 leverage so I can trade a small account. Thanks Black Bull for sponsoring this video. The second misconception is that grid trading is going to blow up your account. And yes, if you just put a grid robot on without thinking, you will blow up your account. I use a robot called the Grid Trend Multiplier, or GTM for short, by Expert Forex, and I've had this one for many years. I really love it, but it is not a set and forget robot. I pick the direction, the grid size, and the lot size, and the robot helps me with all those. Let me show you how to use the Grid Trend Multiplier so you don't blow up your account. So let's pretend I want to trade the New Zealand CAD. I've got the chart open. The time frame doesn't matter. I just want to zoom out a little bit and see what the range of motion is. So let's take a look at the risks here. Let's pretend I want to trade between this level and this level here, which is about 183 pips. If I want to cater for a 183 pip move, I generally like about 6 levels in my grid trading. So 183 divided by 6 is a 30 pip grid. I'm going to drag the grid trend multiplier onto the chart. And before I start trading, I want to plan out my trades. So instead of grid trading and planning mode, I'm going to switch to planning mode only. I want to take profit at $1,000, and my max loss, I want to be making a max loss of $1,000. Whoops. And we want a grid. Do I want buys and sells? Yes, let's go with buys and sells. Our gap size, our grid size is going to be 30, which we calculated before. And for the lots, I don't really know. So let's go with 0.05 for now, and then see if we are correct in our estimates. For the sell, I want it to be copying the buy trade. So it's going to copy the gap size 30 and the lots of 0.05. And I'm just going to hit OK. Because I've got planning mode on, it's not going to take any trades. And now we can see it's got two little thingies. Up here, we've got a red thingy and a blue thingy down here. What I need to do is drag it to the location that I want. So I want this grid to be about 183 pips. Drag that across. Sometimes it's a bit hard to move. We're looking for the price change of 184 pips, which is correct. And in this box, that's a little bit tricky to move. I can see with a move of 184 pips, we've got a total of 7 open trades, which is perfectly fine with me, but our lot sizing is too small. So you can see I've got an open loss of 241 if it was to move 184 pips without a retracement. So I want this number here to be about $1,000. So what we're going to do is need to increase our lot size by about 4.5 times. So I'm going to hit F7, which will open up the inputs again, and I'm going to increase the lot size of 0.05 to 0. Let's go with 0.2, which is a multiplication of 4 times. and wait for it to refresh. And this is perfect. Now I'm holding a loss of negative 965 for a 184 pip move. This is perfect. I am happy with those settings. So to activate the Expert Advisor, I just switch from planning mode over to grid trading mode and hit OK. That's all you have to do. With grid trading, it is not broker sensitive like some other strategies that only work on certain brokers. This one, generally, I've seen across multiple brokers, the strategy does work. And it's not going to blow up your account. I've set it up so I make $1,000 or I lose $1,000. I'm not going to blow up my account. If you like the idea of grid trading, especially with the grid trend multiplier by Expert Forex, then watch this video right here where I go through a lot more trades and a lot more information about how to set up the Expert Advisor. Thanks. Bye.